Well, on the market side, you had M&M coming out with its numbers today. It's been a good performance, especially on the operational front, wherein we were expecting a massive contraction in margins. They've actually given an expansion, 13 points, not expansion really, but yeah, they've maintained it on the same levels. 13.6% is what they had delivered. Q4, they say that was massively affected by industry volumes in both auto and tractor segments. BS6 transition, even the abrupt lockdown is something that really dented their performance. Market share, the good news is that for tractor space increased by 1%. Lockdown to contain spread of COVID has curtailed both supply and demand, which also has hampered their numbers. They see a ramp up in production, supply and distribution from June onwards. They expect a quicker recovery in rural India versus urban, which could take longer. Talking about their both businesses, auto and tractors, they said over 80% dealers are operational in the auto business and manufacturing is currently at 30% of capacity. For the farm segment, they have about over 90% dealers who are back in action and the plants are operating at over 80% capacity, which is a good indicator of how solid the demand is likely to be. So this is M&M for you. The stock was soaring in trade, was up more than 7.5% by the time the market shut shop. Here's what MD Pawan Goenka spoke about the COVID-led disruption and the auto business. Listen.
State the obvious. In my 41 years career, I have not seen a challenge anywhere near what we have observed in the last 3 months. In our tractor business, the COVID-19 impact started just about with the lockdown happening on March 22nd, 23rd. But in the auto business, it started in mid-February with supply chain disruption coming from China. To add to that, there was a major fire in one of our key suppliers end of February, followed by the lockdown. All this happened when the industry was already in a slowdown. On top of that, we were transitioning to BS6 emission norms. This obviously has had a huge impact on our volume and financial performance in Q4, as you will see in Anish's and Rajesh's presentation. But I'm happy to say that within the confines of the industry slowdown because of the economic situation as well as COVID-19, Mahindra & Mahindra has had a very good operating performance in terms of OPM, operating margin, that we have been able to maintain at the previous year level. And we have also increased market share in tractor as well as in commercial vehicles. Our operating cash flow also has been very healthy, and Ace will take you through details. We have taken some hard calls during this time, such as not investing in Ssangyong. We have also decided to exit the electric scooter and bike business in USA and carefully examining other loss-making businesses. The company has done enough borrowing at attractive rates to have a very strong cash position as we come out of lockdown.